Hey, the question of the day, IRA LLC versus just your typical IRA that you're self-directing in an account. Who's the clear winner? And if you have no idea what I'm talking about, we've had 3 videos prior to this that you can go take a look at. The first one's going to tell you what an SDIRA is. Second, how you transact within these accounts, what are the rules? And then third, how do you fund and actually get into these accounts? So highly suggest taking a look at those. But first, who's the winner? Well, I'll tell you clearly who I think the winner is. But first, let's dive into some of the costs on these and compare how you transact within these accounts just to give you an idea, and maybe you decide for yourself, but I'll tell you who I think is the winner at the end of it. But cost comparison, so we're gonna look at this. You've got your typical SDIRA, and it's at a custodian of your choosing. So this, again, I use directed IRA. I've got a discount with them if you'd like to use them, but you can use any self-directed custodian that you choose. I think there's Horizon Trust. There's a few others. Do your research, find which one you like. But this SDIRA, it's just you set up an account and it's at that custodian. So what are the setup fees? Typically, so at least for mine, setup fees. Setup was, let's see, around 400 to 500, at least at the time of this recording. And with that, that gets your account set up. You've got it self-directed in whatever account you, whether it's a Roth, traditional IRA, solo 401k, so on, what have you. It's going to be your minimum of setup. Now, there may be additional charges on top of that. Say if you're going to transfer in-kind assets. So if you want to transfer the stocks that you have in an account or something like that, there are going to be transfer fees to keep it that. Again, the cleanest method is going to be in cash. Transfer it over as cash. It'll help you on your fees on the setup. But in addition to this, what are the other fees? You're going to have just your standard account fees. You're going to have an annual account fee. Annual. And then you're also going to have transaction fees. Like, so if you're submitting a wire, and you may have a check. So you may be submitting a check. I don't know why you would be submitting a check, but there may be an instance where you have to submit a check to pay for one of these investments. You can do that. Typically, I'm just going to go the wire route. So that's the cost there. Now, if you're looking at an IRA LLC structure, it's going to be this first initial step. No matter what, you're going to have to do this first initial step because you have to be at a custodian that allows you to self-direct your retirement accounts. So for an IRA LLC, it's still going to be that first initial step. Oh, LLC. It's going to be this first initial step. So we'll just put quotation marks here. And it's going to be that 400 to 500 setup. Now, in addition to this, that's just getting your directed account. Now, to set up the IRA, you are going to have to go, and I suggest going with an attorney on this, but you're going to have to set up an actual LLC. You'll have to form it. So this LLC needs to be 100% owned by your IRA or by your retirement account at setup from formation. So LLC is set up, and the cost on that, you're typically going to run, on average, mine, they were around $1,200. Again, depending on how complex you want to go, it can go up from there, but really $1,200, it's a good amount where you're going to be able to get this structure set up. This is a baseline. Again, it may go up from here depending on your specific needs. So that gives you an idea of a cost comparison. Obviously, this one's more expensive. This one, it's not bad. If you're maybe only doing 1 or 2 transactions a year and they're relatively simple, it doesn't, like the speed of the transaction doesn't matter as much. You won't lose out on an investment because of the speed. Really, you can just leave it in this account. It's not that big of a deal. You can still self-direct in all the same assets in either one. It's just this one's going to be much more timely, and we'll get into what that's going to look like. So transacting within these accounts. Erase this. So transacting within just your typical SDIRA at the custodian. So what is this going to look like? So I'll give you a real estate example. So we just recently purchased a 4-bed, 3-bath 2022 build within my IRA. Now, I purchased it with this IRA LLC structure, but for example purposes, I'm going to show you how I would have done it if I did not have a structure and I was just doing it directly from the account itself. So what that looks like, so you're going to have your home purchase here. And the next step, so you're going to be negotiating, you're going to find the deal, negotiate with the seller's agent, what have you. But eventually you're going to get to the point where you have a contract. So PSA, purchase sale agreement. Now, when you get to this point, a purchase sale agreement, one important thing is you want to make sure the purchaser, the buyer, you, is your directed IRA account. So it's going to be your company and FBO for benefit of that account. That's what's going to be the buyer. So that's going to be on the purchase sale agreement. Now, also, there are things like there's nuances within the contract that your custodian is probably going to want to review. The main one's going to be that it's actually in the correct name. So the buyer is the correct name. That's going to be one thing they want to review. Again, once you're experienced, maybe you don't have to do this, but when you're first starting out, highly suggest when you get that purchase sale agreement kind of to where it needs to be, confirm with, I mean, you've had the negotiations with the buyer, with the sellers or the agent at this point. You've got an idea of, hey, this is pretty much going to be the final purchase sale agreement. Before you send it to get signed, review it with someone at your custodian and say, hey, just want to make sure this is my first one. Am I filling this out correctly? Do I have the correct name here? So on and so forth. They can answer you very quickly. Submit that contract. Then next, you're going to have to submit what's called a direction of investment. So DOI, so direction of investment. And this one in particular is going to be for what is called EMD. So EMD is earnest money deposit. So typically in a real estate transaction, when you're going to purchase that property, as soon as you get a purchase sale agreement in place, part of that is going to be how much are you putting down as a good faith deposit showing that you are serious in purchasing this asset. So EMD, that's agreed to in this purchase sale agreement. But EMD, to get that funded and sent to the title company, you're going to have to submit this direction of investment form to your custodian. So that's submitted to your custodian, and then that's going to take on average, 3 business days. Say 3 business days for them to actually fund that EMD. So take that into account. It's not something where you can just wire the funds right then and there. It could take some time. So make sure you have a buffer within your contract for when the EMD will get there, when it will arrive. So for example here, we'll give you a timeline. So we've got this timeline here. And you got your purchase sale agreement, EMD, and as you can see, we keep adding days onto it, and we'll get into what's next. So the EMD, that direction of investment is approved by your custodian. That's sent to the title company. And at this point, say you had a 14-day inspection period. So an inspection period is something, again, you agree to in the purchase sale agreement. With that inspection period, that's when you do your due diligence on confirming, hey, the property condition. Maybe you send an inspector there to take a look at it and make sure that, hey, you're not buying a dump. But at that point, if you have to pay that inspector, you can't pay him out of pocket. You're going to have to submit another one of these direction of investment forms to pay that. So take into that account. You may have to submit multiple of these during what we call the inspection period or due diligence period. So you may have to submit a couple different DOIs to make sure everything's paid during that time period. Now from there, and keep in mind, again, that 3 business days. As you can see, this timeline could hurt your timeline a little bit there. So from there, at that point, inspection period's good. You're getting close to the closing date. Let's put this as the closing date here. So we put COE. So that's close of escrow, when you're actually purchase the asset. And right here, just before closing or on the day of closing, you are going to fund the additional cash, what's called cash to close. Now, what's needed to actually finalize that purchase at title and escrow? So that's going to be all your closing fees, as well as what you have to bring as a down payment, what have you, what you're paying the realtor maybe, that's going to be in that final cash to close. Now at this point, to send this, you guessed it, you've got another direction of investment form. So this DOI. Now with this direction of investment, your custodian is going to want to confirm documents that you're going to receive from the title company. That's going to be your promissory note, the deed of trust. They want to make sure, hey, is this in the correct name? Is the promissory note in the correct name? They're also going to want to see things like, oh yeah, the final settlement statement. So the HUD, what is the actual cash to close that title is showing at that point in time. And then your property management agreement. Who is going to manage this property? They want to see all of that at this point in time to approve that direction of investment. So as you can see, this is going to start building up that time period. Again, direction of investments, at minimum, you can have rush deliveries. You're going to pay for that. You're going to pay a hefty fee to do that. But at minimum, on average, you're going to be 3 business days. So that adds to it. Then you got your close of escrow. Now that's all fine and dandy. Seems like a relatively straightforward process. But for those of you that are in real estate, you know, in real estate, nothing ever goes according to plan. So trying to stick to this timeline up here with these items, as far as the time gaps on doing these directions of investments, you can see how things could get a little haywire and you could potentially lose out on that deal. So for a real estate investing standpoint, honestly, in my opinion, the IRA LLC structure is best, but people still do it within these accounts. You can do it. For me, that adds an additional layer of stress that I just don't want. So to give you an idea, that's how you transact directly from the account. It can be done. Now, say you're not into real estate. You could be in something else, and really an IRA LLC structure doesn't make sense at all. Now, I'll give you an example of that. Maybe you're really into cattle, and maybe you're a rancher, you know cattle, you know how you can turn them around for a profit. Guess what? You could buy cattle within your retirement account. Crazy, right? So we have your cattle here. That's a cow, in case you're wondering. It looks a little more like a pig, but hey, that is a cow. So this cattle, what you're going to do is you've identified this investment. And right here, and again, this is directly from the account. You've identified the investment. You decide, hey, I'm going to move on this purchase. Well, keep in mind, you can't have these cattle on your property. They have to be housed on someone else's property. So maybe you found a rancher to do what you need to do with them. And then you pay some type of management fee. So you're going to have that management contract or whatever agreement you have with that rancher for these cattle and what their deliverables are going to be for that. And then you're going to submit that to your custodian with a DOI, direction of investment. Pretty straightforward. Again, that's probably going to be the only DOI that you need for this instance. And then from there, you can either that you wire the funds, or you have your custodian cut a check to that individual. It's that simple. Super straightforward. That's an instance where if you're doing that maybe once or twice a year, this structure probably makes sense. And there's other instances where this structure makes sense as well. You don't always need the complicated structure to get what you need done. But for me, the speed in which I transact, this one makes much more sense. Now, getting into transacting with an IRA LLC. So a lot of people, they call this checkbook control, and you'll see why here in a minute. So checkbook control, you've got your custodian here. I'm going to draw a big institution there. See, again, mine's with directed IRA. Just going to shorten it to directed. So directed, you have your account here. So I'll say I opened up an IRA here. And again, when I'm saying IRA, this is encompassing all retirement accounts. This can be 401ks, Roth IRAs, HSAs, so on and so forth. Just using IRA to make it easy for you. It's just know that's all encompassing. So directed IRA, open up my account. Then from there, we'll form an IRA LLC. IRA LLC. Now this IRA LLC will then have its own business checking account. And again, one of the reasons why you want to make sure you're having a qualified attorney help you set this up is they're also going to help advise you on which business account to use. I can give you the one I use. Again, I really like them. They're not like the typical business checking account where they have a really nice online portal, but they have zero wire fees, zero ACH fees, which is important to me. I'm fine with going through that, I guess, pain, if you can call it that, for the cost savings there. So it's not a big deal to me, but I can help you out with that if you need it. But again, directed, open up my IRA, going to fund this IRA, whether you're either transferring it from an old account or you're doing your yearly contribution. And then from there, you're going to have one direction of investment form, and that is to fund this entity. So it's just your direction of investment. Like the other case, it wasn't to wire funds. This is really just to fund an entity. It's not for a purchase necessarily. So it funds this entity, goes into this business checking account, and then bam, you can now write a check. Checkbook control. You can write a check. You can wire funds from that account. You can use your debit card. Again, this helps you transact very quickly because now you can operate as a business. So we'll go back into that previous example. So we've got the piece of real estate. We've got our purchase and sale agreement. Now again, on all the items that you had to review back here with your custodian, you're going to want to do that internally. You're going to want to actually review those on your end. So if you're in this structure, make sure you know what you're doing, because you still have to do that. Because down the line, if you're caught and you weren't doing it properly, it's going to end badly. You're going to dissolve your account. It's going to be a huge mess. Anyways, you're still going to want to do the same things that your custodian would have done. So just be knowledgeable on that. So your purchase sale agreement, confirm. In this case, the IRA is the buyer, the one purchasing it. And then from there, the EMD that you send. So EMD, this, I don't have to submit any direction of investment here. This is just going to be a wire. Really, it's going to be from the business checking account, but you get it there. But it's just going to be a wire. I'm just going to submit a wire within that company, do that same day. That 3-day timeline that we had here, that at minimum, that just got cut down to 1 day. I mean, I can fund a wire very quickly. It's within a couple hours. It's not a big deal with this checking account. So EMD wire, I have my inspection period. Now within that inspection period, if I have to pay an inspector, so on and so forth, I'm just going to write them a check. It's that simple. Or I can pay them with my debit card. Say they have an online portal where I can pay them at the end of their invoice, and I can just pay it there online. It's super simple. Then you go from here, and I'm going to fund the final cash. So cash to close here, and that's going to go to title. So close of escrow. It's going to be at the title company. So this, again, that's just me submitting another wire. And all those documents, that promissory note, that deed of trust, everything, I'm now confirming that internally. It's not my custodian. I need to make sure all that stuff is accurate. And in the name of this IRA LLC, and everything's kosher, good to go. Make sure the cash to close is accurate. Make sure the title company didn't mess up anything. Again, straightforward. Now, property management agreement, you in these accounts technically can administratively manage. So one, you're going to want to have a property management agreement in place if you're hiring out. But if you don't and you're just administratively managing, then you can do that as well. So just keep that in mind. So with that, super straightforward. As you can see, this structure, you can transact very quickly, which is awesome. It's great. So that's the reason why I go that route, is the transacting within the account is so much more straightforward. And also once it's in that business checking account, I don't have to just invest in real estate. And again, this is the same thing. I mean, it can do it too, but you're going to have a direction of investment form every time you're doing anything. Whereas over here, I'm just going to have a wire every time or a check. So super awesome structure where you can get real-time access to your retirement funds. But again, make sure you watch that video on how to transact within your account. I think it was video number 2, because the rules need to be followed. It's highly important that you transact in these accounts appropriately. So crucial items for an IRA LLC that you want to make sure that you know. One, when you're setting up, so setup needs to be 100% owned by your IRA at formation. So at formation, highly important there. Again, when you form that IRA, the sole owner of that, or form that LLC, the sole owner of that is going to be your IRA up front. So in my case, it's Directed Trust Company, FBO, Josh Smith, IRA, account number, blah, 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 blah. So that's that. Number 2, no transfer. No transfer, LLC. So prior LLCs, probably could have said that a little better, but anyways, prior LLCs, if you had an entity set up previously, you can't transfer that. That's going to be a prohibited transaction. It only is going to be it has to be a new entity every single time. So if you have a pre-existing LLC, can't transfer that. You have pre-existing real estate within another entity, can't transfer that. Can't transfer the real estate. Again, that's a prohibited transaction. Just can't do it. Number 3. So this is going to be disregarded entity. Now, with a disregarded entity, this LLC, you want to make sure that it is classified as that with your state. Now, when you set this up with an attorney, they're going to walk you through some of these steps or give you at least a hint that, hey, you need to do this with your state. Each state's different. With mine here in Tennessee, they've got a franchise and excise tax, and it's very important that I had to set this up so it's classified as a disregarded entity. And what this does is essentially it makes it so the state knows, hey, this isn't going to file any federal or state tax returns because it's operating as a retirement account. So they need to know that. With my state, you're going to want to call your Department of Revenue. That's who I had to call. You may have to call your Secretary of State exactly, hey, what all do you need to make sure I get this disregarded entity status with the state? You want to make sure you go through that. And then, like I said, each state's going to be different. Mine, they had needed some documents submitted to them as far as the bank accounts, who's on the bank accounts, and then the directed IRA trust company, what have they filed as far as taxes, so on and so forth, because directed IRA, or whoever your custodian is, they still have to file every year to the IRS, just indicating what are the values of these accounts. You don't necessarily have to file taxes, but they do want to know the values. So 4, you're going to want to file UBIT and or UDFI if applicable. So file these taxes. Again, it's not always going to be applicable, but a refresher from the prior video. So UBIT is unrelated business income tax. Only time you're going to file this is if you are operating this entity as a business. So say you're into crypto mining or something like that, where it's short-term ordinary income. IRS doesn't want you to have an unfair advantage above any other small business. So they're going to tax you UBIT on your earnings. So you're going to be taxed, I think it's above 30%, but you will have, that's a point in time where you will have to pay taxes or file taxes for your retirement account. So keep that in mind. UDFI is unrelated debt financed income. This is if you have a note. So for example, for the real estate, say I have a note on there. 1, it has to be non-recourse. So it can't be something where it's tied to me in any way. It has to be tied strictly to the asset. This could be seller finance or a non-recourse loan from a bank. Excuse me. but you're going to have to pay taxes on the earnings that are in relation to the part of that deal that was financed. So important item there. So UDFI. And 5. Oh yeah, annual valuations. Annual valuations. So every year, at the end of the year, you're gonna have to submit an annual valuation of what all do you have in this LLC? What are the assets? What are the values of those assets? And you have to submit that to your custodian. So in the case of real estate, I have to get a third party, either appraisal or maybe solicit a realtor to. I can't do it myself, even though I'm a realtor. I have to ask another realtor to produce what's called a CMA, so comparative market analysis on what the value of that property they think it is. That's something that's sufficient for my custodian, may be different for yours, but again, those valuations, whatever's owned by that business, that valuation needs to be provided to your custodian. Now 6, commingling. Very important. Make sure you are not commingling with other accounts. This business checking account that's for this LLC, it needs to pay for everything as far as the investments go. You cannot pay for anything outside of the account and then get refunded by your IRA from that business checking account. It needs to be completely separate, and then you need to have your bookkeeping separate and it needs to be accurate. So suggest probably hire a bookkeeper at this point, unless you're good at that. Again, I'm not good at that, so I hire one out. I've got a general idea, but it's not as good as if a bookkeeper is doing it. So 7th, consult attorney, and CPA. You're going to want to make sure when you're forming this that you're consulting an attorney that is well versed in this topic. They know what this structure looks like. They know all the nuances behind it. Again, super important that you're having this formed with someone that knows what they're doing. And a CPA, the one that are filing these taxes, say you have UBIT, stuff like that, you need one that's qualified in this space. They understand this space. And as far as prohibited transactions, maybe it's a gray area. You want to make sure that you have guys on your team, attorneys and CPAs, that know this stuff like the back of their hand. It's their niche. They know what they're doing. Very important. And lastly, we've got a multi-member LLC. So multi-member LLC. Again, you can have a multi-member LLC if you want, but that's a whole entire other video. If you are trying to do that structure, it is a little more in depth. So definitely you want to make sure that you have a qualified attorney on that. So multi-member LLC can most definitely be done. So as you can see, really the main difference between these, between having an IRA LLC and just having it within your custodian is just the speed in which you can transact. And for everybody, it's going to be different. It may be different for you than it is for me. But for me, who's the clear winner? 100% IRA LLC every time. That's for me. Now, IRA LLC, as far as your life structure, now you may be asking where, everybody's got a lot of stuff going on in their life, so it's sometimes hard to keep track of where does this exactly fit. Now, I'm going to show you something that has helped me out a great deal on how you can look at it. Now, this is something that I found that I learned from a guy named Mark Kohler, and it is really, it's how you outline your life structure. So it's the trifecta of life. So you right here, you've got on this side, really everybody can divide their life into 2 sides. I'll put this a little short right here, but on this side, you're going to have your ordinary income. Now, ordinary income, that's going to be short-term income. This is going to be for your, like, say, your W-2 or maybe you're self-employed. But really on this, the important thing to note is any income you make on this, you're going to pay taxes on that tax bracket. Well, in addition to that, you're also going to pay self-employment taxes, which is FICA. I forget exactly what that stands for. It's like Federal Insurance Compensation Assistance, something along those plans. It's where Social Security is funded, stuff like that. So these taxes are going to equal 15%, 15.3% actually. Make sure I got that right. Yeah, 15.3%. So we got 15.3% there. That's in addition to whatever tax bracket you're at. Then in addition, on this side, you've got your passive. This is your passive income. Passive, well, this is really your assets. And this is where you're going to put more of your passive income. Now, this is just going to be taxed at whatever tax bracket you're at. You don't have this ordinary income where you're doing the FICA. You don't have to pay the FICA taxes in addition. So on this side, to give you an idea on what mine looks like, yours may be just this on this side. So we've got this line, and you've got your day job. So this may be, so this is your W-2. Your side job. Now again, mine's transitioned from this to where I'm just self-employed, but your side job might be your just self-employment here. Again, you're gonna have your business checking account, but day job W-2, side job, it's gonna be that entity that you set up on your own. Say you have some type of like e-commerce side business, something like that. Mine was real estate when I was in it. That's what I transitioned to. But on this side, this is all taxed as ordinary income. Now here at the bottom, I have, it's called a revocable living trust. Now this is for estate planning. Again, if you have any amount of assets, even if you don't have a huge amount of assets, even with your home, you want to make sure that you have some type of will or estate plan in place. Mine's a revocable living trust because that makes sense on my end. And it makes sense for a lot of people actually, but I would consult an attorney on that. Then on that, it goes down to your 1040 tax filing, and then finally your bank. That's me here. So from here, all the funds funnel down into here. Now this LLC, I'm not the owner of that LLC. And again, I've got much more entities on this side now because I've acquired additional businesses or started additional businesses. So this is kind of a simplified form, but all my LLCs, they're owned by my trust. So not owned by me personally. Now what that does is really when, say, God forbid you get hit by a truck or something, your family's going to be taken care of. Everything's going to be clear on exactly where does everything go, who gets what, and all the ownership being in that revocable living trust. It just simplifies it. Everything's streamlined, makes it easy. So on this side, you're going to have tax advantaged. So tax advantage accounts. Tax advantage accounts. And then just after tax accounts. So tax advantage accounts here. What you got there is this is actually where your retirement account is going to be. So if you just have your typical 401k, say you have a Roth, HSA, again, the beneficiaries of all of those accounts are that revocable living trust. Again, keeps it clean and simple. Everything funnels back to that revocable living trust. So 401k, Roth, HSA, and then say you decide maybe you have those accounts that you're able to self-direct. So your IRA over here, or what have you. This is where I have an IRA. So I've got an IRA, self-directed IRA, and that goes to my IRA LLC, which has its own bank account. And beneficiary of this SDIRA, again, it's going to be that revocable living trust. Again, clean, simple, straightforward. Now, after tax on here, this is maybe going to be, for me, it was a holding company. So I've got an LLC over here, and this holds property. So these are just, I didn't buy them within my retirement account. This is just making sure that I have the correct asset protection for my investments outside of it, where I get some of my income from right now that I'm self-employed. So LLC, again, holding company, have multiples of these where they hold pieces, they have assets within those. So you've got real estate, so on and so forth, what have you. That LLC, who owns it? Revocable living trust. Again, it's clean, simple, straightforward. If anything ever happens, it's a clear path. So my family, they don't have to not only deal with the death in the family, but they also have to go through probate. This avoids probate, makes things a lot more streamlined, makes it easier on your family. Again, it's not necessarily something for you. It's something to help your family out. I would suggest doing it if you can. So LLC, so holding company here. Then you're also going to have over here, like say, just your typical brokerage account. So I still, even though I do all this other stuff, I still have a brokerage account to where it's just, I use it as kind of a savings account where it is invested in, it's VTSAX. So it's a mutual fund that tracks the S&P 500 and it gets pretty consistent returns. I mean, really you're betting on the US economy at that point. Again, do your research. This is just me. It's an example. I'm not telling you what to do. But this is an example. So I've got my brokerage. And we've got, so you've got a high yield savings account. High yield savings account. What else can you have? You can have a joint account with your spouse. Again, the list kind of goes on and on here, but these are after tax where you're doing investments after tax that are not inside your retirement account, but they're still passive. It's not ordinary income. So it just keeps it clean and simple that it's on this side. And then also I have my personal home. Now personal home, again, that is owned by the revocable living trust. It keeps it clean, it keeps it simple. Everything's clear exactly where it goes. These accounts too, draw a box around them. But these accounts as well, the beneficiary on those accounts is a revocable living trust. So super simple, super straightforward. Well, hope it's simple for you, but it gives you an idea on how you can break up your life so you have a visual representation on how does this break down? Like where does everything fit? And this for me, again, look up Mark Kohler on the trifecta on structuring your life. For me, it was a light bulb that clicked when I learned this from him. It's just an easy way of, okay, where is everything? Because let's face it, we've got a lot going on in our lives. It's nice to have a visual representation. And then when you go to your CPA or attorney and you give them something like this, they're going to be like, oh, this is super clear. I know exactly what we need to do. And these are the strategies we can implement to help you save money on, say, your taxes, so on and so forth. So it's powerful to kind of look at it in this way. It'll help you out long term. But with that, that's it. So again, IRA LLC, that's the winner for me. It doesn't mean it's necessarily the winner for you. I hope you enjoyed this content. And if you did, please like and subscribe. We've got more of this content coming your way. All right, see ya.